Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Nova Minerals.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our analysis. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Okay, so diving into Nova Minerals. This one, I think, really sits in that high-risk, high-reward bucket. It's a junior exploration firm.
It is. And for anyone who's new to this part of the market, the first thing you have to understand is that it's pre-revenue.
Yeah.
Completely.
Right, no sales, no income.
Exactly. You look at their books for 2023, 2024, there's no material revenue there. It is, a pure bet on finding gold in the ground. They spend money to prove a resource exists.
Which means they're burning cash. So that net loss for fiscal year 2024, it came in at about $17.2 million. That's a lot of money.
It is, but here's the thing that really stands out.
Okay.
That loss actually reflects a 17% reduction in their operating expenses year over year.
17% in this inflationary environment. That's pretty impressive for an explorer.
It's extremely rare.
Yeah.
It points to some real cost discipline from management.
So where did they find those savings? I mean, did they just stop exploring?
No, they got smarter. It was about prioritization. The big, intensive drill program at their main project, Kubaka, was completed, so field costs went down.
Okay, that makes sense.
And they also suspended their non-core exploration out in New Zealand. They basically decided to focus all their capital on the best target.
The smart move, but focus doesn't matter if you run out of cash. So what does their runway look like today?
As of the end of March 2025, they had about $11.8 million in cash. That leaves them with a working capital of around $6.5 million.
Which, on its own, sounds a little tight for a company burning almost $20 million a year.
It would be, but we have to factor in the private placement they did on the ASX back in January.
Right, the capital raise.
Yeah, they brought in another $5 million from that. So when you do the math with their new lower burn rate, they've basically extended their runway for more than 12 months.
So they're funded well into 2026.
Deep into 2026. They're not in a position where they have to rush out and raise money at a bad price. That's a huge de-risking factor.
It really is. It gives them stability.
Yeah.
So they can just focus on what's in the ground, which I guess brings us to their actual competitive edge.
Yeah, let's talk about the moat. Because you're right, a good balance sheet is nice, but it's all about the rock.
So what makes Nova Minerals special?
It's all about early mover access. They've locked up land in these high-grade geological areas that are just really underexplored, not a lot of competition.
And the crown jewel is the Kubaka Gold Project that's in the Russian Far East. What's so special about the geology there?
So this is what's really fascinating. It's not just a gold project. They have confirmed that the gold anomalies are spatially correlated with rare earth element anomalies, REs.
Critical minerals, the kind you need for, what, EVs, defense tech, all that?
All of it. So you're looking at a potential dual product play.
And how does that change the economics of a future mine?
It changes everything. It means the costs of building the infrastructure to get the gold, could be partly paid for by the value of the REs. It just makes the whole project a lot more attractive to a potential partner.
And they have the whole area locked down, right?
100% of it.
Yeah.
A massive 1,067 square kilometer license. And they're not going it alone. They have a joint venture with Arctic Resources, which gives them a lot of technical help.
Okay, but we have to talk about the elephant in the room. This is in the Russian Far East. That's going to make a lot of Western investors nervous.
It absolutely is a risk, and we'll get to that. But there's a surprising advantage there, too.
Which is?
Infrastructure. It's state-backed. There are power lines and rail networks relatively close by. For a project in, say, remote Australia, building that stuff can be the single biggest cost. Here, it's already nearby.
That's a huge advantage. Okay, so solid fundamentals, unique asset. Let's turn to the market. What's the stock chart telling us?
The technicals have been getting stronger and stronger since late 2024. We've seen a very clear trend of higher highs and higher lows.
That's classic accumulation.
Textbook. And for chart watchers, there was a big pattern that completed this spring.
The cup and handle.
A very clean one. It finished up in May, and the breakout above that $1.37 level was the key.
And that's the key, right? The volume. Because a pattern is just a pattern until the money shows up.
Precisely. The breakout on May 27th happened on a 210% surge in volume. I mean, that's not just retail traders, that's institutions starting to build a position.
So $0.37 is the new floor to watch.
It is. And below that, you've got support around $1.30. And, we also had that big long-term signal earlier in the year.
The Golden Cross?
Yep, the Golden Cross hit on March 19th. That's the 50-day moving average crossing above the 200-day. For a lot of technical traders, that signals the start of a new major bull trend.
And is it looking overbought now after that move? Is there still room to run?
That's a great question. The RSI, the Relative Strength Index, is sitting at about 61. So it's in an uptrend for sure, but it's not overbought. Anything over 70 is considered hot, so technically there's plenty of upside.
Okay, so the chart looks good. What about the people who know the company best, the insiders? What have they been doing?
They've been buying. Big time. The CEO bought 200,000 shares himself back in March.
And that's part of a bigger trend.
It is. In total, since January 2025, executives have bought $425,000 worth of stock on the open market.
Wow. 425,000?
It's the largest insider accumulation since the company's IPO. When management is putting that much of their own cash in, I mean, that's a powerful signal.
That is the ultimate vote of confidence. And are institutions following suit?
They are. We saw two small hedge funds, Evanston Capital and Anchor Endurance Fund, really ramped up their holdings.
In the first quarter of this year?
In Q1 2025, their combined holdings shot up by 180%. These are niche funds that know the resource base, and they're clearly seeing what the insiders see.
Okay, so this all leads up to the catalysts. The entire story hinges on what's coming next.
It does. And the main event, the one everyone is waiting for, is the new mineral resource estimate for Kubaka, the MRE.
And we have a date for that.
We have a target date. The company has guided for around July 22nd, 2025. That date is circled on every investor's calendar.
Okay, so what are they aiming for with this MRE? What's the magic number?
They're targeting between 1.5 and 2.0 million ounces of gold in the measured and indicated category. That's the highest confidence resource. It's the stuff you can, really build a mine plan around.
And if they hit that 1.5 million ounce target, where does that put this project on a global scale?
It puts it in the elite tier. And it's not just the size, it's the grade. The estimated grade is between 2.8 and 3.5 grams per ton.
Which is good.
It's phenomenal. A grade like that would put Kubaka in the top 5% of all non-producing gold projects anywhere in the world. Majors are always hunting for that kind of grade.
Top 5%. That's a huge statement. Are there any other catalysts to watch for this summer?
Yeah, they're hitting the road. They're presenting at the Australian Gold Conference in Sydney in early August. Then the Russian Mining Expo right after that.
And the goal there is to find a partner.
That's the explicit goal. They want to get on the radar of a major like Barrick or Newmont to help fund the next phase.
Okay, we've laid out the bull case. Let's talk about the risks. What's the main reason this stock is still trading so low?
It's one word, geopolitical. They are operating in Russia, and you just can't overstate that risk.
Right.
Now, management has tried to insulate themselves. Costs are in rubles. Cash is held locally. But sanctions could still mess with financing or importing specialized equipment.
It's a risk you can't control. And the other big risk is, well, what if they miss?
Exploration failure. It's always the number one risk for a junior. If that MRE comes in below that 1.5 million ounce target, the stock's going to get hit very hard.
So how should we think about that risk versus the reward?
You have to look at the enterprise value. It's currently around $35 million.
35. Okay, and what does that tell you?
It tells you the market is pricing in a near zero chance of success. If you look at what other projects with 1.5 million ounces of high-grade gold are valued at in safer places like Canada or Australia.
It's in the hundreds of millions.
Hundreds of millions, so the market is saying this probably fails.
Which creates a really asymmetric opportunity.
Hugely asymmetric. If they miss, the stock goes down, maybe it gets cut in half. If they hit, the stock could go up 200, 300, maybe 400% just to catch up to its peers.
And beyond the official catalysts, we've heard some pretty significant rumors floating around. We should stress these are just unconfirmed market chatter.
Right, just chatter. But what we're hearing is that there might be some preliminary talks with Politis, the Russian state miner.
A major local player who wouldn't be bothered by sanctions.
Exactly. And the other rumor is about their Alaskan project, Love Creek.
What's the story there?
The chatter is they might be looking at a JV with a major Canadian producer to fund the pre-feasibility study there. That would be huge because it would immediately give them geographic diversification away from Russia.
Okay, so let's pull this all together. What's the final thesis here for Nova Minerals?
I think you have to see this as a potential swing trade or maybe a very early stage investment that is tied directly to that July 22nd resource update. The valuation is just so beaten down by the risks that it creates this incredible opportunity for upside if they deliver.
And all the signals, the technicals, the insider buying, they're all pointing in a positive direction.
They are. So the core question for you, the listener, isn't whether the stock is risky. We know it is. The question is whether you believe the confirmed drill results and that $425,000 of insider buying are enough to bet against the market's extreme pessimism. The really interesting question might not even be whether they hit the 1.5 million ounces. It's what happens the day after. Will a major player step in and risk the headlines to get their hands on a brand new, top-tier, high-grade gold deposit?
That is the compelling puzzle. Make sure you subscribe and tune in next time for our detailed analysis on the market's biggest movers and future catalysts.